Hey guys, welcome back to the Wall Street Bull. Anthony here. I hope you're all doing well and staying safe out there. Big shout out and thank you to every single one of you who have subscribed to the channel. I really appreciate it. If you're new to the channel, make sure you smash the subscribe button down there and turn on that little bell notification as well, because as you can see right here, I love documenting my journey with investing, with stocks, dividend stocks, cryptos, passive income, building generational wealth. That is my goal. So come along this incredible journey. It's been insane so far. Also, if you can give this video a thumbs up, watch it straight through, it would really help me push this channel out to a lot more people, because the YouTube algorithm is absolute magic when you do that. Awesome stuff right now. Let's get straight into it. Little disclaimer, I am not a financial advisor. Please do your own research and due diligence. I do not want to see anyone get financially hurt. That is why my number one golden rule is I only invest what I can afford to lose. And yes, we don't like to lose. You can lose money like that in any kind of investment, all right? So please be careful out there. Do your own research. This is for educational and entertainment purposes only. All right, ladies and gentlemen, the formalities are out of the way. Today is a dividend stock portfolio update. I'm going to start doing these more regularly because I love dividend-paying stocks. It is definitely a different form of investing into cryptos, that's for sure. It is much more slower, takes a long time, but I've seen the growth over the years, and it's just something that's snowballing right now, and it's really awesome to see that. So I will show you exactly what I've invested in, my dividends that I'm bringing in every single year, which are growing. It's really cool, guys. So let's go and have a look at this. Here is my stock portfolio here. I use the brokerage Stake here in Australia. There is a referral link below. Please feel free to use that. You can get a stock in Dropbox, GoPro, or Nike. Please do your own research, of course, with this stuff. And again, I've been doing this for a long time. Buying US stocks is a lot more harder for us Aussies, obviously, because we lose like 20% out of our dollar to buy US dollars right now. So again, it's taken me a long time to get to this point. And yes, I have been heavily focused on cryptos as well, but this is definitely my bread and butter right here. How I virtually got started becoming a YouTuber as well was doing videos on dividend stocks. So here we go right here. Let's have a look. My portfolio is sitting at $38,820.94 USD. I've had a total return of 1.87% on Friday. That is the daily, which is 713.52 US dollars, which is virtually about $1,200 Australian, which is crazy. My total returns are 28.3%. Now that is insane. $8,563. It's literally about $10,000 in returns and gains that I've made investing in the US stock market, purely because I bought all throughout the situation, the pandemic, when the prices of all the markets crashed. I dollar cost averaged into all these positions here and have reinvested my dividends consistently every single week and month back into the portfolio. I've never taken anything out of this, and I love it because it's providing me passive income. And by the time, in 20 years, this portfolio is going to be literally worth about $250,000 just by pure compounding. And again, that doesn't take into consideration if I throw in any more money into this as well. But pretty crazy stuff. This is what it's grown to. Now, I can show you right here the dividends that I've been paid. Let's have a look here. You've got RY, which I think is Royal Bank of Canada. They paid me 13 cents. And yes, we do get taxed here as well because we're not US citizens. I know the tax rate in the United States is around 33%, but because we're not US citizens, we pay half that, so 15%, which is really annoying as well. But anyway, it is what it is. That's just the name of the game. You've got WRK paid me a dividend of 6 cents right here. I bought Sphd. It's one of my favorite ETFs, and I'm going to show you that in a second as well. You've got NSC dividend paid me 22 cents. You've got Caterpillar paid me 22 cents. Now, I just want to show you as well, they pay a dividend of $1.11 per share. So if you've got 1,000 shares of Caterpillar, you'd be getting $1.11 per share, which is ridiculous. Now, Caterpillar pays out very rarely as well. They are a quarterly dividend payer, maybe even a yearly payer. I'm not entirely sure, but they don't pay very often. Most of my dividend stocks pay out every single quarter, and some of them pay out every month, which is nice as well. So that's pretty much how it is. You can get dividends paid out every quarter, every month, or once a year. So maybe Caterpillar, I think, is a quarterly, but I'll have to look at that again. Anyway, Peak Dividends, that's Peak Properties, paid me 8 cents. Prospect Capital is a monthly dividend payer, paid me $6.27. You've got ET, paid me 52 cents USD. You've got AMLP, paid me 18 cents. You've got a deposit of 99 there. PBA, which is, I believe is Pembina Pipeline, paid me 84 cents. You've got EPR, paid me 4 cents. You've got AbbVie, which is medical as well, paid me $1.57. That pays out quarterly. Procter & Gamble paid me $1.88. Now, if you look at here, sorry, where are we, guys? Procter & Gamble. It pays out 91 cents per share. So if you've got 1,000 shares, you're going to be earning 91 cents to the 1,000 shares. So it's really nice to know that, guys. So again, takes a lot of money to do this, but once you do, it starts snowballing. So that's why I love it. Here is my portfolio again. These are all my favorite stocks, obviously. My biggest holdings are obviously ExxonMobil. Again, I bought the dip. I've seen some pretty crazy returns. It's at $97 a share. Dividend yield is at 3.64%. You can see that right there. Again, that was around about 7 to 8% at one stage. It was really high, which was scary for a lot of dividend investors because they could have cut their dividend, but they did not. They continued to pay that dividend as well. I think ExxonMobil is going to be around for a long time, and they're moving into cryptocurrencies, which is really nice as well. If I go on the week, it's had a 4.39% return. On the month, 16.87% return. If I go on the year, I've had 67% return, which is just ridiculous. And again, in the last 3 years, it's up 37%, which is really nice as well. This pays out every quarter. Now, if I go to my other favorite here, which is SPHD, and what I'm going to talk about today and why I love it, it is at $48 a share right now. It is an ETF, so an exchange-traded fund, which is really nice as well. So if you're not into buying individual stocks, you can buy an ETF or an index fund. It's not financial advice, but basically you're buying a basket of stocks, and SPHD is a monthly dividend payer as well. So basically what this does, and I'll show you right here in the description, this investment right here seeks investment results that generally correspond before fees and expenses right now. You can see here to the price and yield of the S&P 500, so the top 500 companies in the United States. Low volatility, high dividend index. The fund generally will invest in at least 90% of total assets and in securities that comprise of the underlying index. So S&P Dow Jones Indices, the LLC complies, maintains, and calculates the underlying index, which composed of 50 securities in the S&P 500 index that historically has provided high dividend yields with lower volatility. So basically, when you're buying this, you're buying a basket of shares around 50 stocks. So that changes, obviously, depending on whether or not it meets the ETF's criteria to be in this particular company and share. So I just want to bring this up right now. I'm just going to wait for this to load. A stupid thing, get out of here. So this is basically the Invesco website, the SPHD, Invesco S&P 500 high dividend, low volatility ETF. Basically, historically, if you're investing in index funds and ETFs, they have been able to outperform the entire market for decades. That's facts right there. Not even fund managers could beat index funds. So again, that's pretty bullish as well. This is why I love index funds as well. So you can see here the utilities are 21.64%. Consumer staples, you've obviously got Altria Group, Philip Morris, you've got Kellogg's, General Mills, Coca-Cola, Kimberly-Clark, Walgreens is at 19.28%. It does invest in healthcare, so AbbVie, Cardinal Health, American Co, Bristol Myers, you've got... I can't remember what that says there. Gildan Sciences right there. It does invest in real estate, 11% here. You've got O Realty, you've got Venitas as well. You've got Boston Properties, Regent Centers, Welltower, Federal Realty Investment Trust right there, Health Peak Properties. It does invest in energy as well. So you've got Williams & Co, Kinder Morgan, Chevron Corp, which is again bullish on that one. Materials as well. You've got Amcor, International Paper Core, Newmont Packaging Corp as well. It's got communications, 6.44%. AT&T, Verizon, Omnicom Group, Prudential Financial, this is finances, Citigroup, US Bank Corp, Trust Financial Corp. Industries as well, you've got Lockheed Martin and 3M Co as well. So that's 3.17%. You've got Information Technologies, IBM, and cash as well. They've got cash reserves, which is negative 0.03% at the moment. So when you're buying SPHD, you're buying all of these companies, which is nice as well. So moving on, SPHD is one of my favorites. Some other ones here, obviously EPD, which is Enterprise Products Partners. I'm bullish on that one as well. Very nice at $27 a share. Basically, now I'm receiving enough dividends from my 83 shares of EPD to reinvest and continue to buy more. That's the beauty of it. It's starting to snowball, which is where you need to get it at. Basically, the portfolio needs to be worth $100,000 US, and it will start to snowball significantly from there. So my goal is to hit $100,000 dividend stock portfolio in US dollars, mind you, to get this start to snowballing quite quickly as well. Obviously, you've got Apple here at $149. That's been a great performer as well. Some other ones here, obviously, are that I'm bullish on, and that is AT&T. Oh, sorry, not AT&T. Of course, AT&T is T as well. Bullish on those, but Intel is definitely undervalued for me as well. Where are you guys? Here we go. So it is up 2.46% on the day. It is one of the very few tech companies that has a very nice dividend yield of 3.36% at the moment. And again, some of these tech companies have barely any dividends because they're basically reinvesting that money into technology. Intel's got a massive market share as well, which is nice. And again, I think it's incredibly undervalued right now. But on the week, it's obviously still up 6.35%. On the month, it's still down 2.86%. In the last 3 years, it's up 1%. In the last year, it's down 21.99%. Obviously, they did lose that partnership with Apple, building their own chips. But again, I think Intel is going to be around for a very long time, and the only going to be needing more and more, demand for crypto. Not crypto. I mean, crypto's on the brain. Computer chips. So again, Intel for me is definitely bullish. I'm going to be adding more of that. I've got currently 11 shares of that at $494 value. $44 right now, I think, is an incredible buying opportunity. But that's pretty much it in terms of my dividend stock portfolio. You can see all my positions right here. Completely transparent with this. I love all these companies. I'm just very, very diversified right now. Realty is definitely another one that I'm bullish on because, again, this pays out every single month without fail. Realty has been an incredible investment right now, 4.35%. I've had a total return of 26% on my money, which is just insane. That's definitely more than above average right now because basically 8 to 10% is what you get normally in the stock market. 35 shares of that valued at $2,478 US, 4.35% dividend yield, and this pays out every single month. Bullish on that one. Now, I'm going to move to my dividend stock tracking app. Right now, no, I'm not affiliated with these people. I just found this and it's been incredible. So I might have to build my own so I can get people on this because I think it's incredible. Very, very cool way to invest money. Not financial advice, but let's have a look here. So you can see here, this is in Australian dollars, $1,863 in income per year. Basically $155 a month, which I know is not a lot for some people, but that will start to compound very quickly. You got $5.10 a day. It's earning me a yield of 4.34%, 30% on average, which is nice. My top dividend payers are ExxonMobil at $509 a year. Sphd pays me $261 a year. EPD $217 a year. Realty pays me $147 a year. AT&T pays me $130. Prospect Capital pays me $105. Vanguard is another ETF or index fund, if you want to call it that. Index ETF is $85 a year. Stag pays me $60 a year. Kimberly-Clark pays me $34 a year. It's really bullish stuff, guys. I mean, this is passive income at its finest. I don't have to do anything other than invest my money and make it work for me. That's why I love dividend stocks, and that is why I'm not even affected by the prices of these things going up and down because all I'm focused on is that dividend. Facts right there. You can see here I've got a $100,000 dividend portfolio goal. That's going to take a very long time to get to that. I'm yet to receive $187 in dividends this month. Let's go here. You can see my portfolio is valued at $54,000. It has gone up since the other dividend video last week. $10,798 in gains, which is 24%. That's really nice. Here are all my portfolio holdings right now. And every time I add one of these, it's just really nice. So for example, if I go to like Walgreen Boots right now, actual fact, let's go to SPHD. You can see here 116 shares at $40 a share. That's my average buy-in. Let's have a look here, guys. Payout frequency monthly right there. The yearly income is $261. Quarterly income is $65. Monthly, it's $21 a month. Daily, it's about 71 cents, which is not much. Now, again, just want to point out, this is the, you can see here down the bottom at the screen, you can see $12 or 12 cents right there. 13 cents. It just slowly increases right there. You can see here in February 2022, they had an increase, which is nice. 14 cents. It's basically been around the 14 cents mark, but you can see how it's increased over time. It was at that level back in February 2021. So it's gone back up to 14 cents, which is really nice as well. This is why I love the app. Now, again, this is really interesting as well. This is just if I continue to reinvest the SPHD dividends right now. This is purely for that particular stock right now. In 10 years, if I did nothing but just reinvest the dividends, it's going to be worth $8,000. And it would be paying me out $448 in annual dividend income, which is really nice as well. In 20 years, it's going to be worth $19,000 and it will be paying me $1,282 in dividends in 20 years. This is how Warren Buffett and Charlie Munger made all their money after compounding after so many years. This is what happens. Now, if I go straight down to the bottom, this is my total portfolio. What will happen in 20 years and 10 years? Let's have a look at 10 years. I love doing this. $88,730 Australian. It will pay me $5,723. That is basically if I stop investing all my money and just let it do its own thing and reinvest the dividends, $5,723 per year. In 20 years, it's going to be worth $255,000 and it will pay me $27,000 a year in dividend income. That works out to be roughly about $500 a week. Now, that is going to help very, very much later in life. Facts right there. This is why I need to get this portfolio well above $1 million in value, because it will probably be generating about $60,000 a year in income. That's going to help significantly for, later on in life, guys. This is what it's all about. Building for the future so you don't have to have any financial stresses later on in life. You don't get told this. Nobody will tell you to do this. Nobody educates you on this stuff. This is why I love it, and it's making me passive income. Nobody will tell you about this. It's facts. So this is what society wants you to do, is get your job, work till you're 80 or 90 years old, have no money. Governments won't help you. Nobody will help you. This is why people need to start investing such an early age. When my baby is due, I've already started a stock portfolio. So, this is facts right here. The earlier you start, the better. So if you're young, there you go. Not financial advice. Anyway, that's pretty much it for today's dividend stock portfolio video. Thank you very much for watching. We'll speak to you tomorrow. Take care. Peace. Bye.